Right, morning everyone. We're going to be starting in a few minutes. We normally start at just a few minutes over as people join the webinar. We've got about 70 people joined so far. We're expecting over 300. So we'll give it a bit of time. Thank you. Hello everyone. We're still waiting for people to come and join the webinar, so we'll just give it a few more minutes. Thanks very much. Hello everyone. We've got about half the people registered who have joined so far, so we'll just give it a couple more minutes. Thank you. Hello everyone. We'll be starting in 2 minutes. Thank you. Morning, everyone. We'll be starting in 1 minute. Thanks. Right. Good morning, everyone. Thanks for joining the second of our Wednesday webinars. We had over 120 participants for our first one, and we're expecting over 300 for this one. So that's really fantastic. On behalf of the CLA, I'd like to welcome you to what I'm sure will be a really informative event. My name is Mike Valencia. I'm the Regional Director for the South East and the Chair for today. At this stage, I'd like to pay particular thanks to our partners, Stratton Parker, Barclays, and Owen Mitchell, all of whom have a speaking part today. Now, as we know, the coronavirus crisis is putting many of our rural businesses under considerable financial strain, and in some cases has removed overnight all means of bringing in an income. The consequences of the government lockdown are numerous and far-reaching. Activities have been cancelled, business deals are slowing, tenants are having difficulty paying their rent or trying to renegotiate their rents. Suppliers are unable to deliver on time or at all in some cases. At least in the main, farming can continue during the lockdown, but as you all know, for many, farming is one activity of several. And a number of our members would like to know more about financial support and what to do about their financial concerns. So we hope to cover at least some of the issues being faced by you today, or indeed on future webinars. At this stage, just a reminder that the session is being recorded for future use, including availability to our members. In terms of the format for today, your microphones and videos will be muted throughout the webinar. And so our speakers will each talk about their area first, but do feel free to ask questions at any time using the Q&A button on your screen. We will then attempt to answer them at the end, but do please restrict your questions to the session subject matter. Otherwise, of course, if you do have any queries, concerns, please approach the CLA for advice in the normal manner. We are going to have the odd poll or two during the sessions, so do please participate and respond. So as for our programme today, we've got Ed Mansell-Lewis, who will start us off. He's director with Stratton Parker. Ed specialises in helping clients develop their estates into thriving entrepreneurial places that engage with their customers in a meaningful and enjoyable way. He previously ran a business that made carbon neutral biodegradable camping stoves out of larchwood grown on his family estate. Since joining Stratton Parker, he has furthered his passion for rural business creation, placemaking, and future-proofing through his work with Rural Ambitions and through an executive MBA that he's doing at Cranfield University. Andrew Parry, partner from Owen Mitchell, will then speak. Andrew advises individuals and trustees, including the owners of landed estates, farms, and rural businesses. He specialises in inheritance and succession, planning, including wills, powers of attorney, trusts, and capital taxation, as well as asset structuring with partnerships and companies. We also have Carl McConville from Barclays Bank. He attended Aberystwyth University and gained a degree in agriculture before joining CWS and then the Genus Group, working as a consultant and leader within the Promar Group. He joined Barclays 14 years ago in the agricultural team have the knowledge, expertise and products to support the diversity and complexity that comes in the estate space with multiple income streams and complex ownership. And last but by no means least, we have our own Louise Speak. Louise has overall responsibility for tax law and policy at the CLA, including the tax advisory service to members. She represents the CLA on the Hmrc liaison groups for capital taxes and VAT and property. Louise originally qualified as a solicitor. Thank you. I'll now hand you over to our first speaker, Ed Mansell-Lewis.
Well, thank you very much, Michael. It's a pleasure to be invited to speak to the CLA members this morning. And you should be able to see, there we are, my home screen, perfect. So what I want to talk about is a business analysis tool that we have developed to help owners of farms and estates to make strategic changes in the future. Now, during this period of lockdown, we have a unique time to work on our businesses, whereas so often we can only work in our businesses because we are so busy ourselves. Now, the first port of call is to safeguard the existing operation of the business through obtaining business support, and my co-presenters talk about ways in which you can do that, stress testing cash flows, and safeguarding the welfare and job security of employees. If you've done that, then I do commend to you this business analysis tool I'm about to demonstrate. It gives rural business owners insight into how they can improve the commercial performance of their businesses. I'm aware that some estates have not historically considered themselves as businesses. More and more, the need to be business-like is of crucial importance, and this is a tool to help with that. The change management consultant, John Cotter, identified the need to create a sense of urgency as the first step to delivering effective change. This pandemic has created a sense of urgency unlike anything most of us have seen in our lifetimes, and change will come out of it, whether harnessed or unbridled. Let's not waste the opportunity to have a guiding hand in the direction of that change. I'm now going to demonstrate the business analysis tool that we refer to as #time-to-review. So this is the home screen of the tool. It provides 4 key metrics or ratios for analysing the performance of a business under the headings of profitability, liquidity, gearing, and efficiency. Key ratios are shown in bold italics. A description of how they're calculated is shown to the right, and the threshold tolerances for the traffic light scores that are provided by the ratio are shown to the right here. In order to calculate the ratios, you have to input balance sheet and profit and loss information. Once the ratios are shown, if you have amber or red scores you want to improve upon, there are suggestions provided. Now, this is a demonstration. As you can see, we have the balance sheet on the left and the Excel spreadsheet on the right, and you're asked to enter fixed assets, current assets, and liabilities. We only ask for plant and machinery and land and property. I'll explain why as we go through. In this case, it's a let property business, so there's no plant and machinery, which is not unusual. There are tangible assets, i.e. land and property, of just over 1.65 million. The balance sheet isn't always the best place to get this information. Sometimes it's a historic value, so it may be you look for a best estimate of today's market value, perhaps a recent valuation. You'll see I've crossed out contents there. The reason being there's no need to put chattels into this financial model. It wouldn't help to work out the return on capital employed of a portrait of your great aunt Margaret. So the tool doesn't ask for that information. Investments may be investments in the grain store cooperative. They wouldn't be stock market investments. In this case, it's 0. And stocks, they may be something like grain in store, but again, in this case, it's 0. The rest of the inputs will be familiar to you from balance sheets that you've seen elsewhere. I'm now in the profit and loss tab, and you're asked to enter turnover, and then the amount of which is BPS and the amount of which is rent from agricultural let land. The reason being that we want to work out what the turnover will look like in 8 years' time when BPS runs out. It's currently paid £85 an acre. The alternative, for example, Nelms, is estimated to be paid at about £30 per acre. And that drop in value will have an impact on future turnover. In terms of what agricultural let land prices will do in the future, well, we've benchmarked it against the average fall in agricultural profit estimated by our research team. They think there'll be an average of 36% fall in profit, and that's going to feed in to the rent that we should expect to receive. Now, these are assumptions. They're in yellow cells, as you can see, so you can change these variables. But with the current data as it's shown, we're expecting roughly a £42,000 fall in turnover in 2028 in this business, which impacts the gross profit, the EBITDA, and the net profit in 2028. The cost of sales in this case is zero because it's a let property business. The rest of the information will be familiar to you from other income and expenditure accounts that you may have seen. So we've put the information in, and now we have our ratios shown on the traffic light scores with average operating margin, good net profit margin, and an average return on capital employed. The current ratio is 2.02, meaning you could pay the value of the current liabilities more than twice with the value of the current assets. So your liquidity is strong. Very strong gearing ratio and interest cover, sometimes referred to as serviceability. It shows here you could pay the value of the bank interest on the loan 5.5 times over with the value of the operating profit. Now, there is a systemic problem with efficiency here because it takes on average 56 days to collect the rent that's due. So there are improvements that could be made there. But the key thing this thing is showing us is that there's a huge reliance on agricultural rent within this business. And in 8 years' time, all of the profitability ratios will be shown as receiving a red score. And your interest cover, your serviceability, will fall from 5.5 to 2.17, i.e. you could only pay your bank interest 2.17 times over with the value of the operating profit, directly as a result of the fact there's an over-reliance on agricultural rent. So what suggestions are available to us? Well, we know that profitability was a problem, so ensuring properties are let at the market rent with regular reviews could be an answer. Outsourcing or creating system-based efficiencies in those time-intensive jobs like management, property management, payroll, HR, and bookkeeping. Or another one, if you know a tenancy is going to end, then market the opportunity to take the next tenancy well in advance to minimize a void period between the first tenant leaving and the new tenant arriving. Looking at efficiency, suggestions to improve that score include collecting rents by direct debit, having automatic debtor schedules, and very importantly, subject to COVID-19 sensitivities, i.e. in good time when it's passed and there's no economic stress on your tenants, then serve Section 8 notices on those tenants that are consistently more than 2 months in arrears and re-let to those tenants that will pay the rent in time and in full. But it's very important to remember that that should not be a consideration during these COVID-19 times. So I hope that's been helpful. There's a poll coming up on the screen very shortly. The question is, do you see this as a tool that you would use on your estate or farm? Yes or no? Now, there are 2 take-home points that I would love you to remember. The first is, this is not a silver bullet to achieving a financial panacea. Rather, it's a tool to identify areas for improvement and to frame the agenda for discussions with trustees and consultants going forwards. The second thing is, if you plan to take on any diversification activities, we strongly suggest you first get your let property business running as efficiently as you can. Your let property business are the home fires, and you want them burning whilst you take on financial risk elsewhere in the business. So do use this tool, please, to achieve that end before you diversify into another sector. I hope it's been helpful. The hashtag Time to Review tool is available to download free of charge. The website is on the screen in front of you. If you want any help in using it, then by all means do contact the head of the rural department in your local Stratton Parker office. Thank you very much. I'm now going to hand over to Andrew Parry from Irwin Mitchell.
Edward, thank you very much indeed, and good morning everyone. And thanks also to the CLA for arranging today's webinar and the series to follow. I'm hoping now to share with you some slides, which I'll just bring up on screen. There we go. So the aim of today's talk is going to be a very brief canter through some of the immediate legal issues that a lot of members are facing, and as Edward has also suggested, to turn our minds where we have an opportunity and where we have time to strategic planning. With regard to the immediate issues, the virus lockdown means that many of us are busier than ever, trying to keep businesses running, trying to maintain their viability. But it is also an opportunity to take stock and prioritise and plan. So some of what we're going to cover in these immediate issues are also parts of our overall sort of lifetime planning. With regard to cash flow and keeping the business running, tax forms a major part of that. And tax compliance, filing deadlines and payment deadlines haven't generally been relaxed by Hmrc or the government. And so we all as individuals and businesses will still be expected to comply. There is some flexibility being built in specific areas, but it is not across the board. Where late filing occurs and there is late payment, we will find that penalties are likely to be applied, and they may not be waived automatically. We may need to apply and appeal against penalties where they're incurred. There is generally a reasonable excuse answer on those appeals, and COVID-19 may well factor fairly highly in the order of the reasons that the revenue might accept. Best advice is really to do all you can to comply and avoid the argument in the first place. But if that isn't possible, document your attempts to comply and your reasons for not being able to comply very clearly. Ideally, communicate them up front with the revenue so that they are aware at the outset and you have that evidence to show them that you've been upfront all the way and that you're the one going to them rather than them coming to you. One particular area that came into effect at the beginning of April is the swift payment of CGT, capital gains tax, on residential property disposals, which will apply to both sales and gifts. Now, the property market is clearly in a dip at the moment and a lot of transactions are on hold. But where they have recently completed, there is an obligation to make a disclosure to Hmrc and to pay the tax within 30 days of completion, which is a much shorter timescale than we've all been used to for decades. There is some explicit leeway from the government on that for transactions completing between 6th April and 30th June. There will be no late filing penalties applied before the 31st of July. So if your filing deadline falls before the end of June, you will not be penalised if you're late in filing after your 30-day limit. But beyond that, there's no explicit relief at the moment. So it's worth keeping an eye on that, particularly if you're contemplating as part of your estate planning making gifts and a liability would be triggered, and you may not have under normal circumstances, you might have planned to have the cash available to fund that liability. You may find yourself not having that option. So again, approaching the revenue to discuss the situation would be useful, provided you can get hold of them. With regard to tax inquiries, from the contact I've had with Hmrc on certain matters, particularly in relation to inheritance tax, they have said that inquiries have been generally put on hold, which I think is helpful. And they're only going to pursue them where taxpayers volunteer or specifically request that the inquiry continues. So I think that is quite helpful. It also is worth noting that about 75 to 85% of Hmrc staff are now either not in the office or attempting to work from home. But across the board, they will not have full access to their office systems. And areas of valuation, like the district valuer, will have great difficulty in fulfilling their roles in moving around and inspecting properties. So inevitably, there will be some delay. Moving on to company filing matters, Companies House. There has been a very helpful explicit extension of the filing deadline for accounts, and you still have to apply for this. It isn't granted across the board, but if your filing deadline is falling due, you can apply to Companies House for a 3-month extension. And if you cite COVID-19 as being your reason, I understand it will be automatically granted, and that will be granted immediately. The Secretary of State has also stated that they will continue to monitor what other filing obligations may need to be extended. And there is talk of legislation being introduced, which I haven't yet seen, that companies will be allowed to defer the holding of AGMs and to hold AGMs by other means where that isn't already allowed. So again, that's quite helpful. Company directors have particular duties relating to liquidity and solvency of the company, and there has been some news around unlawful trading and a particular relaxation of a specific criminal liability for directors who are engaged in wrongful trading when the company is otherwise insolvent. What that doesn't amount to is a relaxation of the civil law obligations and other obligations to not defraud creditors and not to undertake transactions at an undervalue. So one needs to be particularly careful if one is looking to take assets out of trading vehicles or to move them between companies within a group. And so despite all the difficulties that we're facing, company directors do need to be extremely careful as to what they're doing and making sure that they're acting within their powers. If they don't, there is a risk that they will incur personal liability and that the corporate veil can be pierced. So that is definitely to be avoided. With regard to tenancies, I'll just mention very briefly, I'm sure we're all aware of the fact that commercial leases are really, any flexibility is subject to commercial negotiation, whereas there is some protection provided in relation to residential tenancies. Proceedings for eviction have largely been stayed for 90 days if they're already in progress, and landlords are encouraged not to issue, and courts will not be receptive to proceedings being issued. There is also the government has arranged for mortgage holidays. There is no statutory rent holiday for residential tenancies, so tenants need to pay their rent as far as possible, and landlords need to be as understanding as possible, whilst also making sure that they maintain the viability of their own business. With commercial leases, it will come down to the parties abiding by their terms, potentially guarantors having to step up to the mark where the tenants themselves default. With regard to rent holidays and rent deferrals, rent holidays implies that there will be a relief from the rent payment for that particular period. The preference will be for deferral, and in all cases it will be a question of what is the quid pro quo for that deferral. Is that rent deferred going to be amortized over the period, over the term of the remaining term of the lease, or over a specific period after lockdown ends, for example? Might there be a lump sum payment on a given date, or possibly an extension of the lease at the end? In all of those cases, it is really important that landlords and tenants make sure that the arrangements are documented properly and that any variations are recorded. Very briefly on issues relating to wills and lasting powers of attorney. Execution of wills is hampered by the fact that you need 2 witnesses to be present when the person is signing their will. And with the current restrictions on social distancing and shielding, it can be extremely difficult, and particularly access to hospitals and nursing homes. But it is possible, and there is case law from, believe it or not, the 18th century where wills have been witnessed by line of sight through a window, and it has been recognized as being valid. So one can stretch the boundaries, but fundamentally, in order for the document to be valid, one needs to comply with the rules. And unlike New Zealand and Scotland, the English government has not yet relaxed any of the requirements for witnessing. So it is a question of taking practical steps to comply with the law as it stands. For lasting powers of attorney, obviously there's a need for certificate providers. Doctors are increasingly, understandably, very difficult to get hold of to provide any kind of certificate for these kinds of things. And so one is left defaulting to someone who has known the donor of the power of attorney for 2 years. So friends and neighbours may be able to fulfil that role while social distancing. The registration of those documents will take time because the Court of Protection is under extreme pressure. It's also worth noting that for attorneys, they need to be very careful as to what they can do, particularly for ordinary powers of attorney, which are neither enduring nor lasting. They can only be used when a testator has mental capacity. So if someone is ill with the virus, or if they lack capacity for any reason, they need to, the authority under that power of attorney ceases. And it is only where you have a lasting or enduring power that attorney can continue to act on behalf of the person who lacks capacity. It's very important where attorneys are dealing with businesses that they ensure that they have power under the relevant documents to act on behalf of the person, of the sole trader or the partner in relation to their business. There will obviously be restrictions for professional partners, but for farming partnerships and those kinds of things, it may be possible, subject to any restrictions in the partnership agreement. And where you have an office holder, like a company director, attorneys generally cannot act and take on those roles. They are personal to the individual and they cannot be delegated. Two final points. Urgent probate procedures. If we find ourselves in a very unfortunate position where someone has died and there is a business that needs to be kept running, there is a specific procedure which enables probate to be obtained quickly, called a grant ad collegienda bona, which can protect, if the objective is to prevent loss and preserve the assets of the estate, and that will include the running of a business. There is a procedure in place which the revenue can facilitate by not requiring immediate payment of tax and providing a letter of credit, and the probate registries are set up to move those applications forwards quickly. The final element I just wanted to cover very briefly is that with strategic planning, before the virus had its full impact on us, we were all aware that the Office for Tax Simplification, the All-Party Parliamentary Group, had reported on proposed changes to inheritance tax, and specifically a review of agricultural property relief and business property relief. We think it is very likely that those changes will be brought in by a government in need of money. And so now is probably a very important time to be reviewing our businesses, making sure that we will qualify for those reliefs, looking at the trading versus investment balance, and making sure that all of the factors, as best we can, fit the parameters required by Hmrc and that we document it properly. I will now hand you over to Carl McConville from Barclays.
Thank you, Andrew. We're now running slightly behind time, so I will canter through my my thoughts. As Michael said at the outset, this is really quite a difficult time for a lot of businesses. The government has stepped in and provided significant support, and what I'm going to run through now is just some of that support and how that may help you, but also look at other ways that you may be able to help yourself. So first of all, looking to grants. The government has provided a degree of grants to be dealt with by local authorities. And at this moment, we have seen only 24% of the businesses that we think are eligible for those grants having been paid. Now, a lot of these are being paid directly to clients, to people that are qualify for those grants. However, if your local authority does not have your account details, they will not be able to pay you directly. So if you haven't had the grants that you think you're eligible to, then I would really encourage you to get in touch with your local authority. All of the banks and lots of other organisations out there have specific COVID support websites. I'd encourage you to look at those. Barclays certainly has one with lots of links and lots of support. Equally, support is quite area dependent. So you will see that support in Scotland, Wales, Northern Ireland and England are slightly different. What I'm going to talk about will be focusing mainly on England. So we have the £25,000 grants available to certain businesses. We also have support for self-employed, sole traders and partnerships, which many of our smaller businesses will be eligible to look to. As a bank, we are encouraging all of our clients to look at those grants as the first form of support. This is money that is there for you and does not need paying back. It is a grant. The second place that we think that people should look is for deferment. We've talked, Andrew talked a little bit about deferment, and Louise will talk further about some deferments that are available from Hmrc. But specifically, I want to talk about deferments of debt repayments. We would expect that all customers that are facing financial difficulty are asking for capital repayment holidays. Now, that might be for your asset finance, it might be for loans from Funding Circle or from your bank. But not having to pay that capital at this difficult time will allow you more cash in your business to keep your business going. So far, I'm seeing that the vast majority of those applications are being given due consideration, and most are being accepted, and people are being put on an interest-only period for a period of time. It's important to understand what the final position is going to be, when you will be required to pay that back. Some people are increasing the payments post the capital repayment holiday so that you still mature at the same end date. Other people are extending the end date. So again, something that's worthy of discussion. The next thing that we expect people should be looking at is furloughing of staff that, if the business is closed and unable to trade, then clearly the requirement for all of your staff to be in your business isn't there. The government scheme for furloughing is open, and it'll be discussed more next week on the employment seminar that the CLA are running. So I won't go into any more details there, but we will be expecting people to look at that. The fourth form of funding and support for your business would be the Coronavirus Business Interruption Loan Scheme. Now, this is a loan scheme introduced by the banks on behalf of the government. They're government supported. What do I mean by government supported? They are loans that the government will pay the interest for the first year. They will pay the fees to set them up. However, and they will also guarantee those loans. However, those loans will need to be paid back in full over a maximum period of 5 years following the initial capital repayment holiday of the first year. Businesses to qualify will need to be able to give their banks their latest annual accounts, less than 270 days old after they've been produced, so up-to-date accounts. They will be expected to show budgets of what was expected to happen within their business, to be able to demonstrate that their business would have been profitable under normal circumstances had it not been for COVID. They will also be expected to demonstrate that post-COVID, assuming that the business goes back to a normal trading position, that they can repay that loan in full within the 5-year period. Now, for many farming businesses, that simply won't be possible. However, don't despair. The banks are out there and are being supportive. And I would encourage all customers of Barclays and other banks, if you are experiencing financial difficulty at the moment, and you have a business that is well established and is trading well, to talk to your bank about business as usual lending as well. Many banks are looking to support customers over a longer time frame than 5 years. You don't necessarily benefit from the guarantee, and you don't necessarily benefit, and you won't benefit from the interest being paid by the government for the first year. But your business will have the funds that means your business can survive. Now, I've cantered through. We are going to ask some questions later. Without further ado, I'm going to hand on to Louise.
Yes, thank you, Carl. I'm just going to share my slides now. What I'm going to be doing is talking about Hmrc's role in providing support to your businesses. So that might be ways in which you can get some cash directly into your business from Hmrc, but also how you can actually defer payments due. Go back one. So starting with the coronavirus job retention scheme, that's already been mentioned by the other speakers, and as you probably know from the news, there's been a lot of applications to that scheme since it went live on Monday, and obviously you really need to have your existing PAY scheme, and you can claim for 80% of gross wages, and obviously we're well aware of that cap. it's useful that to know you can get your national insurance payments, and 3% of the pension contributions. So that's the statutory payment that you have to make under auto enrolment. So if you do pay more, it is capped at that 3%. You will need to keep a record of the sums you receive under the scheme, because it is going to be treated as business income when you come to do your end of year accounts, and you have to report your taxable profits. So it's quite wide ranging, the employees you can claim for, and it's very helpful that agency workers or those on flexible 0 hours contracts to be included. We did have to seek some clarification from HM Treasury about the applicability of the scheme for directors, because there was some confusion about whether furloughing directors who still had statutory duties to perform under the Companies Act would be regarded as not working for the business. So they are allowing directors of a company to be furloughed and still undertake those statutory duties of filing with Companies House, unless of course you get the extension referred to earlier. So that's very helpful. And if there's one or two, also 2 or 3 directors in a business, certainly others, just to keep things going, to make sure that that family company can still get some funds coming into that business. Now, we did think when it was first announced that they'd extended the date for qualifying for the scheme, that they would help new starters. But because the rules require you to have notified Hmrc through the real-time information system, and you would normally only notify new employees when you make that payment, it really is only going to apply to those new employees that are paid weekly. So it doesn't really help those on a monthly payment. So there's been some new guidance published, and I really would strongly advise, if you haven't already put a claim in under the scheme because you've yet to furlough any employees, and you can furlough at any time throughout the furlough period, do read the guidance that is online. We are providing links to these tools that are available, and do use the online calculator to help you work out what you can claim. Now, you will have to do it for each employee, although if you've got several employees being paid the same amount, obviously there's less calculations to do. And there's also some Hmrc webinars that you may find helpful in addition to this one today. Now, what we do know about the online application scheme is that it is no ability to save the information. So you can't just start putting information in and go away and try and find it and come back, because it will time you out after 30 minutes of inactivity. So do make sure that you have all the information you are going to need to hand before you start your application. Now, more importantly, for many of our members who are self-employed, is they need to get some income in that they're not able to get because they're unable to trade fully. So there is also this additional support scheme for the self-employed. You will be contacted by Hmrc, and then you will need to apply through the gov.uk website. One word of warning, and this has been made very clear in the online government guidance, is be aware of scammers. Fraudsters haven't gone away in this period. If you get an email, a telephone call, or even a text asking you for information about your credit card or your bank details, it's more than likely going to be a scam. So be very cautious, but you will be contacted if you qualify for the self-employed support. Excuse me, and then you will need to apply online. Now, this is due to be live in May. They've obviously prioritised the furlough scheme first, because the businesses need that cash in their bank account to pay wages, to keep their staff on board. But you will be getting, hopefully, beginning of June, getting these direct cash grants. And the government is saying, yes, it's taking time, but there are other means of support in the interim, like the loans, excuse me, additional grants, and the universal credit that you can now use in the interim. Again, this grant is going to be business income for this tax year. So one thing we had to kind of clarify is that the for partnerships, the original wording of the guidance wasn't clear whether the £50,000 limit of trading profits was for individual or for the partnership. And that has now been clarified, and it's for each individual member of the partnership's share of profits is £50,000. I'm so sorry. So there are the rules on the screen now about qualification for the scheme. But you do have to make sure that more than half of your income comes from self-employment. So if you're running a self-employment business alongside salary income, you may not qualify for the scheme. And you can use an average. If you've had a very good year last year and took you over 50,000 and not a very good year previously, the average may help you to qualify. And if you're using farmers averaging relief, you need to look at the amount of your profits before you've applied farmers averaging. Now, ways of keeping money in the business is to utilise the income tax deferral. Now, normally we have 2 payments a year for self-assessment income tax. When this was first announced, it was for self-employed, but it's now everybody who's in the self-assessment regime. So that includes individuals who receive dividends and trustees. And this is automatic, but be aware you're going to have to pay this back in January of next year. Now, if you're VAT registered and you've got a quarterly payment due in May and June, you can choose to defer it. But you can also make that payment as usual. One thing you really must do is send in your VAT return. For a lot of farming businesses, because you're making zero rate of supplies, you're more likely to be getting a refund or a reclaim of your input tax. So submitting your return on time will enable Hmrc to make that payment. If you are going to defer payment that's due, you really must cancel your direct debit, because otherwise Hmrc will take the payment automatically after you've submitted your return. And again, you've got to pay any deferred VAT by 31st of March. So again, you want to think very carefully about the timings of payments that are due next year and make sure you can factor that into your future business planning. So thank you. That's a very quick canter through the results, and I'm going to hand back now to Michael.
Many thanks, Louise, and well done for bravely forcing through despite your cough. So I was going to actually ask you a couple of questions initially, but I think I'll give you a chance to recover first. And so the first question I think I'll pose to Carl. And the question is, what happens with businesses that have less than a 3-year trading history and that were just starting up? Our bank says they cannot consider us, and other banks say they are prioritizing their clients. So until they've finished reviewing their applications, they won't start with the rest. Can you answer that?
Yeah, so we will look at businesses with less than a 3-year trading history. We'll look to their forecasts, and we'll look to where they were against their initial forecasts. So that's where we are at Barclays. We will look at those. What I will say is that we currently have, as of this morning, just over 45,000 applications for Siebels loans, which is nearly 10 times our normal workflow. So yes, we are extremely busy. We've got a massive backlog, and our staff are just working as hard as they can. I would get in touch with your bank and encourage them to support you. And failing that, feel free to get in touch with Barclays, and we will do what we can. And we have a good website where you can register your interest, and they will get back in touch with you as quickly as they possibly can.
Okay, thanks. There's another one actually, probably for you, which is government has registered Siebels under Treaty Section 3.1. Consequently, Siebels is a maximum of 6 years to repay, too short for hardest hit businesses such as growers supplying garden centres. Consequently, also Agry and Horticultural are subject to the EU limit of 100k on state aid benefit. Some banks are only lending 2.5 million, not 5 million, to horticulture and agriculture, so as to keep the year one interest and fees below 100k. The Dutch have applied under section 3.3, which is natural disasters, and are giving perishable, I've lost a question there, hold on a second. The Dutch have applied under section 3.3 natural disasters and are giving perishable stock loss compensation grants at huge levels. Will the CLA and the banks ask the government to re-register urgently under section 3.3? Carl, you go first and then we'll ask you to come in.
Okay, thank you. Very technical question. I think the first point I'd make is that BPS doesn't count towards the state aid rule. So for the vast majority of businesses, they'll get the full benefit of the £100,000 interest relief up to the level at which that kicks in. So yes, we are opened up to Siebels up to £5 million. In terms of the wider lobbying and what other governments are doing, that's beyond my remit, and I will pass to the CLA on that.
Louise, do you have anything to add to that? You need your microphone.
I think we'll take that away. I'll look at it in more detail.
Okay, thanks a lot. I've got a couple for you, Louise, actually. They're all about sort of, I suppose, actions the Chancellor might take. So the first one is, with considerable hit on public finances due to the coronavirus crisis, the Chancellor of the Exchequer mentioned in one of his briefings that the self-employed would have to pay higher taxes in line with general population. Has the panel got an idea where he might strike to increase the tax take in this area? And the other question was, the government's taking on a lot of new borrowing to pay for this. Do you expect tax rises? If so, will it be duties on beer, tobacco, and so on, or income taxes, rates or allowances, or capital taxes?
Oh, yes, I'll come back first. On the national insurance, there was previously proposals to make changes to the self-employed national insurance. I suspect they will come back and look at that again, and self-employed do pay much lower rates of national insurance, and that's usually to counter the fact that they qualify for benefits differently and obviously taking more risks. So I think we've got to be prepared to see some changes to national insurance. As to where there will be tax changes going forward, I think that depends on what the overarching strategy is going to be of this Chancellor. Clearly the priority has got to be able to keep the economy, particularly the rural economy, going, and that's certainly what we'll be pressing government to do. And too many penal tax changes that are going to impact on businesses and the ability of businesses to continue to operate and to be profitable is going to be more damaging in the long term. So I think it's a very difficult balance that he's going to have to strike. Where he's going to put tax charges, I wouldn't like to speculate. But certainly we'll keep monitoring and liaising with Treasury where we can, just to help shape the government's thinking going forward on potential tax changes.
Okay, thanks. Did anyone else want to add anything to what Louise has said?
Michael, I may, if that's okay.
Yeah.
I think we've already had these consultations on inheritance tax, and particularly on agricultural property relief and business property relief. They have been quite well heralded, and the argument would be that it is a tax that affects people after their lifetime. Of course, it also affects ongoing businesses, so there will be a balance to be struck, but I think that is a likely area. But I think we are all going to be paying for this for a very long time. And I think we can probably all expect tax rises across the board. But I think the crucial thing will be the balance between not taxing too hard too quickly and letting the recovery happen.
Okay, thank you. I've got quite an interesting question here, again for Carl. There are quite a few, as you might expect, on banking. We're hearing from the Office of Budget Responsibility that there's a strong probability that the economic fallout arising from this crisis will be worse than the banking crisis of 2008. What lessons have you learned from then that can be applied to realigning the economy post-lockdown? Quite difficult, not an easy question. You need to put your microphone on, Carl. Thanks.
Apologies. Not an easy question at all. I think slow and steady is key to sorting this out. I think we know that we're in this for the long game. This is not going to be a sprint to get the economy back on track. It's going to take a long time, and gently does it. I think, from the banking crisis, we did recover. We did recover very well in the end, but we took it steady. And I think that was the lesson learned, and I think that will be the lesson that we will take forward. But a very difficult question.
All right, thank you. Just a question, perhaps I'll throw this open to the panel, see if somebody wants to, would like to answer it. If you can claim for, let me see if this says, if you can claim for more than one period, does it matter if someone was on furlough for 6 whole weeks, but it was less than 3 weeks of the period you're claiming? Does that matter? Anyone answer that?
Michael, maybe bring that back next week to the employment questions.
Yeah, we could do. Yeah, thank you. Okay, I think we'll go on to, so do you know if companies can claim more than once on the CJRS website, or can they only claim once for the whole furlough period?
From what I've seen from how this works, you're claiming for the current salary period. You can put a claim in for the next period. So it's not for the whole period, because obviously businesses will be reviewing the furloughing. They might have somebody off now for 3 weeks, and then they come back in and they go off again. So I think there's that flexibility there. So it's looking at pay periods as far as I understand it.
Okay, thank you. And on to, again, a question for Carl. My bank is proving very resistant to an interest as well as capital holiday. Why is this? Especially at the start of a long-term fixed rate annuity loan where the bulk of servicing costs will be interest.
So interest costs are the cost of funding the loan. The bank will have had to pay for the capital in some way, and that interest pays for that capital. So in the government, in the scheme that the government are supporting, the Siebels scheme, the government is paying that interest on behalf of the customer. We would always expect interest to be paid as and when it falls due, as that's a cost of the money, frankly. The capital is something that we would like to have back, and we expect to get back, but we're happy to defer that for a period of time in most situations.
Thank you. I've just been just reminded, of course, that if people aren't quite getting the answers they want because the questions are quite tricky, then do please contact the CLA using the advice email address. One more question, I think, before we end. Businesses damaged by the shutdown will not be able to borrow as much as they need to trade through if they cannot demonstrate serviceability, that is, repaying over just 5 years. In spite of having an 80% government guarantee, banks are further reducing their risk and preventing businesses getting as much as they need to survive by demanding EBITDA cover of up to twice the annual servicing cost of all borrowing. Given the 80% guarantee, why is 1.25 times EBITDA cover not sufficient?
Okay, so the rules are set down by the British Business Bank and the government in terms of their support. So what the banks are doing is applying the rules that we've been given on this specific scheme. What I would suggest in that situation is if you can't prove serviceability at the level in order to benefit from the Siebels scheme, then speak to your bank about a business as usual lending request. I've had several clients that are in this boat personally, and we've been able to support those as a normal business practice where the criteria have not been quite as steep. So talk to your bank about what they can do outside of the scheme rules. But the banks are very firmly having to apply the rules that the government and the British Business Bank have laid down.
Okay, I will do one more question, Colin. It is for you again, which is why are the banks making it such an involved struggle to get the financial support urgently required by many other farmers finding themselves in similar positions? The businesses do not have the luxury of taking it steady and need to empower the first line relationship managers with a financial delegation to take incisive action in affording additional temporary but urgently needed funds. And other bankers on this, why not Barclays?
So I can speak for Barclays on this. Our business managers have got the authority to apply capital repayment holidays for their clients directly under certain circumstances, i.e. businesses that are performing as normal. Our managers also have the ability to apply temporary overdraft limits, again, for businesses that are strong and stable. So for good quality, well-established businesses where they have a relationship with their bank, Barclays, certainly their managers are empowered to provide support in the short term whilst we go through the larger, longer Siebels process, which necessarily has to be an auditable track record and we have to be able to demonstrate the affordability checks and everything else before we can let that money go. And it's a loan and it needs documenting and everything else. But like I say, the capital repayment holiday and the temporary overdrafts, our managers are empowered for well-established, strong businesses to put those in place quickly.
Thank you. I'm afraid that's all we've got time for. I'd just like to thank on everyone's behalf our speakers for today. Quite an interesting presentation on Sutton Parker's business analysis tool. It's free of charge, so please do use the link. Andrew talked about the host of immediate legal issues and strategic planning, and Carl has dealt with a whole host of issues, as you might expect, in terms of support available, plus helping in other ways. And finally, Louise dealt with the arrangements with the Hmrc. So again, many thanks for taking part. Many thanks to all the attendees. Please look out for details of our forthcoming webinars and two very exciting conversations with interviews with Mark Southern, the Barclays National Head of Agriculture, which will be at 3 p.m. on Friday, the 1st of May. And that will be followed by Henry Dimbleby at 4 p.m. on the 15th of May. Just say this session has been recorded and will be available afterwards. But many thanks and hope to see you again. Thank you.